Any questions? Feel free to ask. Okay, thank you very much, ladies and gentlemen. Thank you very much for attending my Thinking Traders webinar series. Okay, some of you this afternoon I have a webinar on how to trade gold and silver. Okay, and some of you, thank you very much for coming to join me for the option series, the US market option series. In today's session, in today's webinar session, my objective is to show you the different what I call the different opportunities available to trade the US market with $250 or $100 capital exposure per trade. Objective exercise is to teach you how to be a thinking, how to be so-called to be sensitive and to be a thinking trader. Trading strategies, let me upfront with you. To me, to us, to good traders, is just tools. Tools do not make the master craftsman. The car do not make you a professional driver. It's you, the thinking trader, the thinking driver, the thinking chef, that make achieve the results. Okay, now let's go continue. Disclaimer needed as usual. Making money, losing money is your own personal responsibility. If trading, investing involve risk, therefore, if you are a person who are sensitive to risk, who don't want to lose money, who want to make a lot of money, then it may not be suitable for you. If you're looking for a way to make a lot of money, please talk to your professional financial advisors or other professionals for guidance. Today's session is how to use $100 capital money to trade big name stocks. To say today's session is slightly more unique. This session is not focusing so much of the big name stocks. It's more this today's session will be emphasizing focus the different strategies that you need $100 to trade. Okay, do stay back as long as you can. There will be a live interactive live market session around 10 o'clock or 10:30 to where I will be showing you how I analyze the market, use find structure the strategies, and to explain to you in how to structure a trade in real-time context. Should around start around 10:30. Now is a PowerPoint slide first. For those who are not familiar, questions please ask. For those For those who are not familiar with me, this is my background. I retired in 2002. Okay, okay. I retired in 2002. I'm very passionate in trading. I've been focused since my retirement in 2002. I've been actively seeking to help my fellow traders be a more what we call more proficient, more efficient, more savvy trader. Ladies and gentlemen, let me repeat again. Trading is not about strategies. Strategies is just tools for you, the competent trader, to use. Okay, strategy use. So I retired in 2002. I by nature I am a portfolio trader. Means that I trade shares, futures, options, everything interchangeably. To me, all the different underlying assets class are just tools for us good traders to extract profit into from the market. Okay, this as I appeared earlier, I am quite passionate what I'm doing. So I that's one reason why I offering a free 90 minutes long one-to-one private session counseling session. By the way, fast audio check and visual check. Can you tell me what are you seeing now? Can you tell me what slides are you seeing now? Okay, thank you. My internet a bit laggy. Wait a minute. Thanks. So, anybody who need help, please call me up or WhatsApp me. Don't call me. WhatsApp me. Okay? And I will arrange to have a private session to you in person or by WhatsApp. Okay? In person or by WhatsApp. Before I continue, this is here are some of the capital to start trading. Okay? If you trade spot forex and CFDs, $3,000 and $10,000 each. US options, $4,000 is more than enough. Most normal trading, most normal trading practice are what we call directional traders. Are directional traders. Meaning what? Most of you are directional traders, means that you predict market directionals. You are doing what we call bullish trade, or do a bullish trade, or do a bearish trade. Okay, so you are doing bullish means that you buy to go up, or you do a bearish, you short to go down. So basically, you most of the time you based on technicals or fundamentals or news. This style of trading is what I call one directional trading. This style of trading is what I call one directional trading. This is the most common form of trading in the world. Most of them say I bullish, I buy Microsoft to go up. Or I bearish, okay, I sell Tesla to go down. Or I bearish on Kodak, I short Tesla shares. So basically, you are what we call one directional trading. Means that you either open buy to go up or sell to go down. Any questions so far about normal trading practice? Okay, this is the most common one. Bullish or bearish, up or down, one directional. Nothing wrong with one directional trading. One thing is actually make it more simple. One thing good about it, make it more simple. But one thing bad is what? In order for you to be a good directional trader, you must be right consistently. You must be right consistently. Means that I do a bullish trade, right? The market must go up. If I do a bullish trade, the market don't move, I go and lose money to slippage. I go lose money to commissions. So another common practice everybody use now in the world is what you call system trading or strategy trading. Means that they go into the market with a particular strategy in mind or trading system in mind, a methodology in mind, and focus on it to find trading opportunities for this type of trading. This type of trading what I call strategy first, market last. Right? Strategy first, market second, you last. In my student pool, unfortunately, to me, it's not a very good idea. Primary reason is because why this is not what you call, you're not focusing on what is the real area of to be focused. What's the area of real focus? Become good traders. To become a good trader, you must not focus on the strategies. You must focus on the market. Market give you the opportunities. The strategy or methodology or system are just tools for you to extract your profitable to extract profit from the market in a systematic, fixed, what you call fixed risk or predetermined risk way. Questions? fast audio and visual check. Can you tell me what slides are you listening? What slide you're seeing now? Are you hearing my voice? What slide are you seeing now? Okay. So, okay. Thank you. Normal trader thinks in terms of market to go up, bullish, market to go down, bearish, or sideways market. This is a typical thinking trader, normal market, normal trader as per se. Nothing wrong with this way, but unfortunately, in real world trading, the market can go more than three directionals. Okay, market give you more opportunities to trade than three markets. In a good trader, especially when using options, you can trade bullish, bearish, sideways concurrently. This is important now. This is very important now. In the past, it's always bullish market, bearish market, sideways market. Okay, but in today's market now, we have we have bull market, bear market, and recently somebody CNBC said, okay, kangaroo market. Okay, kangaroo market means what? Volatile, non-directional market. Okay, it can be a directional market, it can be bullish by a bearish directional market, but if there is a lot of abnormal high volatility, means a lot of spike up, spike down, then it will create what you call what you call a kangaroo market, even in one direction, or bearish direction, bullish direction can be a volatile market. Now, normal trader is what? Bullish, correct? I trade bullish market, I buy. Bearish market, I sell, correct? Okay, but in my world of trading, there is more than three, so-called three opportunities to make money from. Look carefully. Option trading market is directional market. You can make money in directionality. You buy a call, market go up, you can make money. Buy a put, market drop, you make money. Sell a call spread, market drop, you also make money. Sell a call spread, market don't move, also can make money. So we got a lot of opportunities to make money. In option market, there are three key factors that drive profitability. Profitability, these three these three factors also define your losses. Inside directional market, correct, means you take a trade bullish, like Kodak like that. Last week I tell my students to go all bears, all then go bears. Bearish market, we make money because Kodak dropped a lot. Then next one is option premium price. Means time decay. Okay, if you pay too much options, you buy something every day price increase. Every day the option premium time decay will come to play. Thirdly, option premium volatility. These are the three factors that able to determine you to make money in a normal share trading or CF trading or spot forex trading. You are doing directional, means that you must be right to make money. If you're wrong, don't move, you're going to lose money. But option trading is different. Option trading, you can structure a trade such a way that even the underlying do not move, even the underlying do not move, you still can make money. Even the market go against you around, you also can make money. It's only how much money you make only. In option trading, if you do a trade that make you 10-20% 10% 20% return on capital exposure or capital risk, okay, to us a 10% return is a fail trade. It's a failed trade because normally option trading, you want to target 30, 40, 50, 60% return or more. 10% return is a failed trade. A bad trade is the one trade we lose money. All these three, especially the option premium volatility, is a power form, a very powerful what I call tool for us to able to do a $1 trade or $50 trade or 10-cent trade on Google or Amazon or expensive counter. Normally, most of the time trading, when you buy a CFD or buy a spot or you buy shares, you need a lot of money. If you don't have a lot of capital, that means you must do trade what we call margin trading. Margin trading means that you have to go, the broker lend you money. In fact, at that point blank, a lot of people, most people account got burned is because of margin trading. Means that they borrow money to trade. CFDs, spot forex, futures, all shares are what we call borrow money trading. Now, the three styles of option trading is what? Directional trading. I'm bullish on Microsoft. I bear a bullish trade. I can sell a bullish trade also can. Okay. So directional, then another form of trading, directional trading itself is trade. Another form of trading is what we call income trading. Means that objective exercise for this type of trading is to make money in market go up, make money. Market don't move, also make money. Market drop, also make money. This is what I call passive income trading. Also known in as delta neutral trading. What is income? Means that when you do a trade, you collect money upfront. Okay, and not only that, collect money upfront. Is shorting shares is not income. Shorting shares collect money upfront, but collect money upfront not enough. Even you collect money upfront, if the underlying do not move a single dollar or move $5, you still can make money. Passive income means that we make money through time decay. Delta neutral means that if the thing drop $5, $10, you make money. The thing go up by $15, you make money. This is why the thing don't move, also make money. This is what I call income trading. Shorting shares is not income trading. Okay. Next, high option premium volatility trading strategies. This one I will hard to explain to you. It's bright red. It's considered very advanced. I can how to make a 500% return, 1,200%, 300% return is using high what I call high OPV. Okay, high OPV advanced strategies to do a trading. Anybody, any questions? Anybody, any questions? Anyone? Okay, at the high level of trading, when you do directional trading, you either trade bullish or bearish. Unfortunately, nothing wrong with trading bullish or bearish directional trades. You need to be right consistently. But in today's market world, there is a more advanced, more comprehensive form and more rounded trading. It's called portfolio trading. Means that for $5,000 account size, you can do for $5,000 account size, you can do with 50% market exposure, 2005, you can do a basket of 11 trades, 5 bullish, 3 sideways, 3 bearish. This is what called portfolio. Portfolio means that you are doing a basket of trades. Objective exercise is not to make a lot of money. The objective exercise is making money is last. You're doing such a trade where we do 11 trades, 10 trades, 15 trades. Its objective exercise is to achieve skill competency, skill mastery. Skill competency is skill mastery itself. Because other people say, Thomas, I want to make a lot of money. No. Methodology strategies do not make a lot of money. It's something like this. Thomas, I graduate from NUS, therefore I'm automatically entitled. I become the managing director of IBM Singapore. That is not going to happen. Knowledge, do not confuse with knowledge with competency. Knowledge is just knowledge. Competency skills, and ability to execute, manage trading to successful culture is different. It's never about knowledge. Any questions? Anybody? You see now, for $5,000, you can put $1,500 inside the market. Otherwise, that you can do for learning purpose, for practitioner level, you can do $100 per trade. Therefore, $100 per trade. Therefore, you can do 15 trades. Of the 15 trades, you can divide it into 5 bullish, 5 bearish, 5 sideways at the same time. Okay. Any questions? You please ask. Any questions? Any questions? Most of you are traders, are thinking in terms of what bullish, bearish, and sideways. Unfortunately, this is what you call conventional normal traders. But in my world of trading, we are trading not three directional, bull, bear, and sideways. We are trading extreme volatility up, ultra down, and option premium volatility. Okay, ultra up, ultra down is abnormal big move. Okay, abnormal big move, going up or going down. Bullish, bearish, and sideways is normal market behavior. Any abnormal move up, any abnormal price going up or dropping, going down is called ultra up, ultra down. If you want to call it break up or break down, also can. Then another sixth dimension of trading is option premium volatility. This one is based on what? This one is based on option pricing, individual option pricing to use this option pricing to structure trades. That is 100% based on option pricing, option premium. This I'll explain more later on in the live market component part. Most of you are directional trader. Trade bullish going up, trade bearish going down. But options is multi-directional, multi-dimensional. Okay? Because when you buy a share, is in perpetuity. Options, you can buy 60 days options, you can buy 5 days options, you can sell 6-day options and buy 64 days, 53 days options concurrently. So options is not only multi-directionality, bull, bear, and sideways, also multi-dimensionality, means that multiple time frame. Questions? So there is normally in the world forex trading, future share trading are normally one on top directional. Take a bullish trade or take a bearish trade only. Options got 4 major classification of trading style: directional, income, earnings, abnormal volatility, multi-dimensional trading. These are the four pillars of option trading. This one enable you to trade multi-dimensional, means that trade left, right, center. So in any market context, there is always opportunity to trade only. It's whether you, the trader, decided whether you want to trade or not to trade. Tonight's talk we focusing on strategies that primarily is what we call $100 per trade. When I say $100 a trade, it's not $10,000 per trade, not per share. It's $100 capital exposure per trade. As you can see from here, this company called RCL, Royal Caribbean Trade, in a period of 17 days, we do 6 trades, or six trades. Okay, buy $87, take profit at 190. Buy $80, take profit 160. This one is based on one contract basis. Okay, of course you can do one contract or you can do 10 contracts, those different. You can do 20 contracts also can. So one contract at 85 cents costs you $85. 10 contracts of 85 cents is $850. But you notice buy 4th of March, next day take profit, buy 85, take profit at 165. Double my money overnight. This is what we call fixed risk capital trading. Here is a normal. This is what I call directional trading. All these are what we call bullish trades, not bearish trades. So besides bearish directional trade or bullish directional trade, here is a income farming trade. This one is the intra-week trade. You can see this trade costs us $100 capital. Collect $50 upfront. So therefore, maximum loss is $50. So therefore, make 50, lose 50, return over capital risk is 100%. As long as beyond me stay between 116 to 148, you make the money. Secondly, most important thing, this is a fixed risk trade. No stop loss, no margin or leverage needed. Actual returns, of course, this is the opening trade. Actual return, how much you make? Okay, I hold it for how many days? Okay, I enter a time. Enter a time is 3rd of May, 3rd of August. 5th of August, I take profit. I sell $50. I buy back for $6. I make $44 in 2 days. My risk, my return is what? My return is approximately, wait a minute. My maximum my profit is $44. My maximum loss is $50. So my return over risk is around 90% return in 2 days. So this type of trading is what I call fixed risk trade. This type of trade is known as farmer trade. Once you enter a trade, you leave it alone until you harvest until you take profit or you close the trade. This trade is only 4 days trade only. Any questions, anybody? Here is another farming trade. April the 2nd, open a trade. Okay, capital needed $100. Duration intra fortnight. Sell $54. Maximum loss is 46. Okay, on the second sell on the 13th, take profit, buy back, sell to open $54, buy to back for $13. Make $41. Return over risk $90. You notice something about the trade now? This trade as long the price stay between $68 to $82, you make money. This one is $250. Same principle, Shopify. Okay, so whether is it $100 or $250 or $500, we can structure the trading strategy to suit your trading capital. Strategies to me always come last. Market come first, you come second, strategy always last. Anybody questions? Fast check. I think I got internet lagging problem. What are you seeing on your screen now? Baidu. Okay, my side is lagging now. Okay, gentlemen, give me 3 minutes. Let me do something first. My screen is lagging. Why don't we all take a 5 minutes break for me to reset my screen or my software? Can you see my screen now? Okay, now before we go further, when you do trading at time, when you do in today's market, we need to be very more precise. Last time said I do a day trading. Excuse me, intra hour also day trading. Scalping 50 minutes also day trading. Do a 4 hour also day trading. So in today's trading environment, you need to be more precise. You cannot tell me I'm a swing trader. 2 days also swing trader. 4 days also swing trader. 8 days also swing trader. 2 weeks also swing trader. 2 months also swing trader. 90 days also swing trader. In today's market environment, you want to talk about trading, you need to be very, very precise. More precise means I an intra-hour trader. 1 hour less. Thomas, I intraday trader means I trade 8 hours or 10 hours a day. Same day. Intra-week, 8 day cycle. Intra-fortnight, 15-day cycle. Intra-month, 35-day cycle. Means open and close 35 days. Intra-quarterly, open more than 1 month to 100 days. Intra-month, open more than 8 days. 8 days, so open more than 15 days to 1 month to 35 days. Additional 3 months, 3 months or more. In today's market now, to be fair each other, I tell you upfront, don't hold the trade too long. Most of my students will tell you, I teach how to trade. Everything must be tactical or short term, means intra month or intra fortnight, or sometime like you say often, hey, 2-3 days or 1 day can make money. Thomas, 2 days, 3 days, or you can make 80%. Why don't I hold it for next 14 days so I can make 120%? That is a bad idea. In today's market, you need to be fast in, fast out. You need to fast in, fast out. Okay, you need to fast in, fast out. Why? Thomas, why don't hold trade for 60 days? Save commission cost. Why should you hold trade for 60 days to make one profit? When 60 days, you can enter in 4 times. Enter a trade, 5 days, take profit. Enter a trade, 5 days, take profit. Is better, correct? So which one better? 1 month, 30 days, take profit 1 time, or 1 month, take profit 4 times? Which one better? Okay, why? Because every time you take up profit, you are you re-enter again, take profit $1, then we enter again $2 again. You do that 2-3 times, by the time you lose 1 time, it really make 3 times $1 already. Look up proficient trade. Another thing is this. I don't like people to do 60 days, 90-day trade, but not because it's good or bad, because beginners 69 trade, you will never get to learn trade properly. By the time you finish 90-day trade or 30 days, you forgot what you're doing there. And now with a small trading account capital, you need to do as many as possible short term means intra fortnight or intra month trades as possible with as low capital as possible. Market analysis got 4 types available: fundamentals, technicals, price action, quantitative option analysis. I don't want to talk too much about it. I just focus on quantitative option analysis. Okay, quantitative analysis is based on option premium pricing for each individual contract. You notice here, no need to analyze chart patterns. Don't need to analyze fundamentals or technicals or whatever. You just simply follow the money. Any questions so far? Anybody, any questions? Here are the list. So for those are newbies or first time come here, I showing you here a list of potential $100 to $250 per trade. This one is based as of March this year. So now the price go up so high, some of the trades may not be $100 anymore, maybe 250 or even $500. Okay, if you're looking for a list of potential good trade to trade, here is a master list for you. free from me to you. Any questions, boys? Okay. The list of good companies. Bad companies are removed. But wait, ladies and gentlemen, disclaimer here. This is based on March. Market can change faster. Okay. But Coca-Cola, McDonald's are not fast changer lah. But a friend like Bank America is not too bad lah. But things like what no, like Boeing lah. Okay, okay, they are moving very fast. Okay, Boeing lah, Tesla is right now a lot. Google lah, Nvidia lah, all these company any company once it runs you $1,000 share price the spread will not be $1 already. It may be $250, it may be $500, maybe $1,000. Actual capital will required on market. We don't particularly care, but this one now have been tested, traded over many years, proven to be what? Proven to have good option liquidity. Jeremy, be careful. When you buy shares, not a problem. But if you trade options, which one more important? Chart pattern more important for shares, or which one more important? When you trade options, chart pattern more important or options more important? Mary, Monica, and Young, feeling when you trade when you do option trading, you trade on chart patterns or you trade on options? Anybody can give an answer? Be very careful, ladies and gentlemen. When you trade options, you are not trading on chart patterns. When you trade on shares, then your focus is on chart patterns. When you trade options, when you do option trading, your chart patterns is not the key factor to choose strategies or methodologies or whatever. Your key factor is you trade options. So your actual trading is not based on chart patterns per se, it's based on options. That's why I have devised option premium volatility analysis. It's unique. It's not based on chart patterns. That's why OPV trading is not based on chart patterns all fundamentals. This is the trading life cycle of US optionable shares. Got earnings, got post earnings, got normal farming methods. Then we got normal directional methods. So every 3 months, the shares rotate. The shares will have a what we call every month, every 3 months, what we call earnings season. Earnings season is start of a 3 month cycle. So you have multiple different opportunities to trade the company, okay, using multiple different strategies. This is a directional, this is a options trade allocation plan. Just imagine for $2,000, you can do a basket of at least 8 trades. Okay, 8 trades, 8 to 10 trades, 8 to 10 trades of with your $2,000 capital exposure. Trading on what? Earnings breakout day trading directional trading intra-week intra-month, intra-quarter positionals, trend trading momentum trading, all can be done. Any questions regarding trade allocation plan? Any questions? Here is a sample. Here's a sample of how you do trading. This is a sample is a sample with a $2,000 trading account, budgeted account. Facebook lah, Apple lah, Alibaba lah, Netflix lah, Google lah, Amazon lah, Euro USD lah, Gold lah, SPY lah, Diamonds lah, all these are things inside. So this is just a plan that shows you what's available to trade. No such thing you cannot find trade one. It's only whether you get. It's no such thing. No trades available. It's only whether you can find it, see it, understand it, and trade it properly. Here is a sample trade plan here, portfolio last year. Some okay, can see buy Apple bullish trade, Apple bullish trade, 99 cents. Facebook bearish trade, $1. Amazon bullish trade, 130. Alibaba sideways income trade, collect $1.51.13. Forex, FX, Euro, UDA, buy $93, 93 cents per contract basis. All these are what we call. That's why I said there's no such thing as nothing to trade. It's only whether you understand the opportunities, whether you can define opportunities, and whether you have the skills, competency, and the capital budget to trade the thing. Any questions? Anybody? Any questions? I come to the end of my slides. Okay, don't worry. Okay, okay. We will definitely spend at least half an hour, 45 minutes, half an hour or so in the live market context. And okay, after this one, we will take a short break of 15 minutes or more. Then we'll come back around 9:45 or so. Then we will look at the live US market. So like people, Karen, Marie, and all other people, Suling, wherever it is, stand by with a company. I want you as a public help out, help to help me to teach you better. Stand by a company, stand by a company, or stand by a trade you want to do. Then I will see the market, analyze the trade based on chart patterns, based on option pricing, based on underlying, based on price action, value, momentum, etc., etc. Then I will give you my free market analysis, and if can tradable, I will structure for you a sample trade. Whether using options or shares, no difference. If you want to do share trading, also can. Any questions? I got upcoming class on power options. Okay, 70% theory, 30% live market for beginners. If you're interested in my upcoming class, please do drop me a message. Then from there, I will have a quiet discussion with you. Like one of you like that, send me a message early on this afternoon. I will have a discussion with you tomorrow morning. Then from there, I will assess your feasibility to trade. Okay, ladies and gentlemen, I am a trader. Means that before you take my class, I would like to have talk with you. I like to assess your feasibility, I assess your skills, your competency level. I want to make sure you have a higher chance of learning. For those people who are really keen into practitioner level, like here like that, 80% live market learning. Trade to learn. If anybody need any help, call me a message or interested in know my upcoming class. By the way, ladies and gentlemen, I don't advertise in Straits Times or wherever it is. I just drop a notice only. If you want to know about my class content, please drop me a message. Okay? Any questions, anybody? If not, gentlemen, you all take a 15 minutes break. We will come back around 9:45. Okay, I want you to stand by a company of your choice, whether you do a bullish trade or bearish trade or something you want interested looking at. I will give you my personal opinion. I will analyze for you and give my personal opinion if whether it's suitable to trade. If suitable to trade, what type of trading strategies can we use. Tonight itself, we will run through at least at least four to six different strategies. Any questions? 15 minutes coffee. 15 minutes coffee break. Okay lah. $15 minutes enough lah. Okay, let's look at the first one. The first company requested was A Zone. Okay. AZAO here. Now, who asked for this company? America, Zoo, Norway. What was the question? You want to know? Who asked this company? What was the question? You tell me your question, your budget, your objective. Then I'll explain to you my outlook. Hello? Whose trade is that? Okay. You have a okay now different. If you want to enter a trade, I'll give you one side of advice. If you want to get out a trade or want to continue a trade or you want to do a future trade, the advice I give you, my comments I give you will be different. Too bad. No such thing as recovery. Every trade going merry, we cannot afford to lose, then you should not enter the first place. Tell me what you have now. Tell me your trade. You see, you want me to do recovery. And my students know, even my tutorial students, coaching manager, do not know me. I don't like to do recovery because most of you, because most of them, cannot handle. Most of you cannot handle recovery. So can you tell me your entry parameter? You enter shares, options, or futures, or whatever it is. Without having the trade details, it's impossible even to suggest whether you want to close a trade or not. Okay, Maria, type up your trade details, please. Without tell chat, there's no way to tell you. There's no way from $55 to recover back to 60, recover $10 with one action. Now, will not recover. Yes, you can recover back over the next 6 months, 1 year, with substantial substantial increase in capital exposure. Yes, you can do that, but that's the reason why I tell people not to try to do trade recovery. Buy shares, is it? Options. Can you tell me what you do now? I repeat, what you buy? CFDs? Cash? Okay, cash. Okay, now is this okay? Question now: which broker are you? What's the objective now for this one? What's the objective for this trade? Are you going to do so-called direct short-term trading, or you want to do it as an investment? If you want to wait for long term, you can always sell cover call against your shares. No. I'm not interested in making loss. I'm not interested in losses. I'm interested. What is your objective? Are you prepared to hold the shares? May I ask you a naive question? Your shares at $59. How many shares you buy? 1,000? Okay, no, but is it 100 or 1,000? Have no relevancy to me. Most important, your shareholding, AXO, is it 5% of your total cash assets? %20. Okay, 20% is it? Okay, fine. Then my personal point of view, cut loss. Because you know why? As far as I can see, gentlemen, ladies and gentlemen, look at chart patterns. Do you think this company anytime can go back bullish now? Entry price $59 here. Right here somewhere, ah. Angie, Francis, Sam, do you think you want to hold the trade? Because the problem is this, so you want to hold, recover your $400 loss or $4,000 loss or $40,000 loss. I think the question is this: for the time you're try not to lose the $4,000 or $400 or $40,000. I think will be better if you take the money, go and do other trading. Okay. Next, there's one way. There's one way to do, there's one way to do cover. There is one way to so-called reduce your losses. Call cover call. Unfortunately, look at it, gentlemen. Look at option premium. 7 days only 60 cents, 75 cents. Let's say look at 35 days. Look at it, gentlemen. The option premium telling me that this company is not going back to $59. Okay? The bid look 18th September at the mall is only $1.40. That show you the options pricing, the buyers and sellers of options for this AXO up to 18 September 2020, 35 days away telling me this company is not going to plus minus move $2 up or down. I repeat, this company is not going up, going down. For you go back to $59, do you think when will that be? Anybody? Angie? Francis? Shirley? It's going to be long, no? Even you sell cover call, you will need to sell. Let's say now you want to sell a cover call for up to December this year, December. Okay, no, there's no December. Okay, we sell until October. 65 days away. You see, you sell December, you still cannot get back your $4. Shares. So you are entitled to sell cover call. Unfortunately, you sell for 63 days away. You only collect $2.50. Your $5. Okay, Marie, drop me a message tomorrow morning. I will have a private. I will have a private look. I will have a personal private look at your trades. Mary, because I don't want long discussion. After all, I do not know how many shares you buy. If you buy 100 shares, you have lost $4, $400. You buy 1,000 shares, you have lost $4,000. If you buy 10,000 shares, you have lost $40,000. So I don't want to Chinese say to stress you out unnecessary. Okay, but personally, based on option pricing, based on chart patterns, based on price action value, okay, I don't believe this company is not based on option premium pricing, based on my current present outlook, buyers and sellers options, it's not going up to more than 47, 47, 40, no 58, that 40, 58, no 58 or $57 level. If you're lucky, If you base option premium analysis, if you're lucky to test to break $58 coming coming 18th of September. Okay, so next candidate, I saw what SE. The option pricing telling me this company is not going to move. This company havoc, man. Company make Singapore famous and proud. Okay, bigger than DB, market cap bigger than DBS Bank. Okay. Angie, talking about silver afterwards. Okay, fine. We talk about gold better. I think silver is much more fat. Okay. So now, whose trade is this? Sorry. Okay. Xiu Ling, tell me, you have a share inside, or you're looking to do a trade, or you're doing to what? No, when do options is an instrument. What is objective? My objective is to do a swing trade for the next 6 months. My target profit is $150 or $250 based on fundamentals by Boom, CNBC, BlackRock, etc. You say when you say do option trade, you must be a trader. Must be very specific what we want to do. Okay? Are we doing an intra-week trade or technical trading? If you look at chart patterns now, okay, you will do a directional trade. It's not easy to do directional trading. Why? Because there's no directional as per se. Currently now there is a channel between there is a trading channel now approximately a 128 level to 130 level. Okay, there is a channel trading at 131 level to 128 or 129 level. One one nine level here. Okay, the price action value is not too bad. Okay, every day is running about $4-5 a day. Yesterday is running $4 a day, and today is how much? It's running about also another $5-6 a day. So the thing shoot up, yes, break the thing up, but unfortunately not sustainable. Could I retrace backwards? Okay, now it's going sideways mode. So now, if you tell me what's the objective, do option what? You want to option income trade? Also can. You want to do a bearish trade? Also can. Bullish trade also can. So let me go delete everything from here first. Okay, now let me show you for this trade what I will do. Based on this trade, I will not do a bullish directional trade. This is going to be an income trade. Okay, why? I show you now. If the income trade go up back, we do not know. I can structure a trade for you now, but end of the day, most important will be what? Most important will be the bid ask price we're going to collect it. This trade, I can do this trade now because this trade fulfill tonight team. Tonight team, every trade is $100 per trade. You notice okay, my students you know to count Sorry I taken out a lot of I taken out the details so you all don't can't see it now. My student know how to follow me. 35 cents? Nah, 35 cents. Okay, 170. This one is based on option premium analysis, not based on Greeks, not based on standard deviation. It's not based on price action value. And it's based on pure dollars and cents of the underlying. free learning trade. One contract, $100. Maximum profit, 56. Maximum loss, 48. How many days? Next Friday night on the 21st. Xiu Ling, what is your budget? I don't understand your question. So this is out. What is out? Okay? Any questions? This trade is a perfectly acceptable trade as long this company SAE stay between $116 to $142. Next Friday night, you got potential chance of making 80% return on capital. When I say capital, referring to risk capital. This trade is based on option premium analysis. Sorry, Siu Ling, I don't quite understand your question. Anybody got any question for C? Francis, Sam, anybody want to do a bullish trade for this company or bearish trade for this company? Do be careful. Earnings is coming up. I repeat, earnings is coming up. This company earnings is not a okay lah. This is not a this is not a high OPV earnings company. Siu Ling, I don't understand your question. So this is out. Can you be more detailed and specific? Francis, Sam, Gerard, anybody want to do a bullish positional trade for this company? Perfectly valid. Still is perfectly valid. It's only is this one. This iron condor is structured based on $1 capital exposure. Okay, so I don't know what is your capital per trade. How big is your account size? How many trades you have? I do not know. So this one on the theme for the topic for the night is $100 per trade. So how? Anybody got any question regarding this C? Anybody got any questions? As for the rest of you, my students, if you want to do this trade, go ahead. For directional trading, please wait. Unless you want to do a 4 months long, 6 months trade, then that's a different game. Anybody, any questions? Hello, anybody, any questions? Before I go next company. Next one is Disneyland. Sui Ling. Any questions? Sui Ling, any question now? Next, Disneyland. This company, okay. Next week, this company, can do a bullish trade. Next week. This week cannot. Disneyland. Okay, nice. I like it. Okay. Uh, wait. Sorry. One by one first. Your buy call is for which one? C or Disneyland? If you want to buy a long-term call, my advice to you, do not touch this company. Let me explain to you why. Current now, as you can see from here, based on the last 3 months, 60 days price action, chart patterns and price action value. Now we are in a sideways market. Okay, okay, sideways market. When you say long-term call, you're referring to how long the call. Okay, gentlemen. So if you want to follow, let me help you. Can you say I want to do a 1 year call or 6 months call or what? You must give me a time frame. You must be specific. What is long term? Some people long term is 3 hours, Okay, but in between now, at this moment in time, you can do a income credit spread trade here, income passive farming spread trade here. Okay, for C, the price is what? Sell 1424 call, buy 143 to H, sell 116, buy 158. This is a $1 trade. My students, you are starter students. Please go and practice one trade like that. Thomas, how reliable is your analysis? You see, I structure analysis. I base on what I see here. I know you all love to use probabilities out of the money. My 142, is 79% out of the money. My 116 short put, 116 short put is how much? Is 66% out of the money. My return over risk is about 65 to 70 easily about 85%, 90% return over risk. Win 42, lose 58. So this trade is 100% valid. Okay? But Xiuling, if you want me to buy a long-term call, can. How long? What is a budget? If there's no budget, like the show, like Jack knows here, no money, no top, because it's very difficult to structure a trade if you do not have what? Objective for a trade, duration of a trade, and your capital exposure for that trade. The objective, yes, bullish. Okay? Okay, duration, how long? I haven't become mine yet. Now you have to say 1 year, $1,000. Let's be honest, it's not going to cut it. Let's be honest, gentlemen. If you go and buy a 35 days trade, 35 days trade will cost you $1,000 already. This is October the 18th. See lah, will cost you how much? One contract is $1,000 for how many days? For 35 days, 18th of September. So there's no way for you to do a $1,000 trade for this company. Unless you want to do this way. There's one way for you to do this. I don't like it, but you ask for it, I teach you. Secondly, stop. There is no 1 year options available. Yeah, look carefully. When you do trading, you cannot say I want this, I want that. You must respect the market. You must see the market. You don't have 1 year long. You only got 6 months. 6 months or 1.5 years. No, 6 months or 6 months or 18 months or 16 months straight. Yeah, or 16 months straight. So which one now? This one, this gentleman, there's nothing wrong what she's asking to do that. But then you must check the market. The options available is 189 days or 525 days. Which should I do now? Okay, if you want to do 1 year or 6 months with $1,000, is what we call a low probability trade. A low probability trade you want now? I suggest if you want to surveillance way, drop me a message. Okay? Gentlemen, if you want to do a low probability trade, can. Okay, you go and buy February 19 next year. Okay, go and spend your $1,000 on buy a 170 call. Also $1,030. The problem is why I say a low probability trade, because for you to make money, the break even is how much? The break even is $130. Okay. Anyway, gentlemen, the iron condor, the so-called the farming iron condor for this company, $1 spread. You can do it for this week. Okay. Your raise is how much? Your raise is about 50 something cents only now. Okay, Disneyland, gentlemen, we can do a bullish. Yes, current now. If you do a bullish trade, your trade must be how long? Okay, I like it in a way. You must break the high here. Current now, the last 5 candles, 2, 4, 6 candles, is technically speaking is a sideways. After the earnings was on the 4th of August. After that, it shoot up all the way, doing now between 130 and 133 level. For we to enter a bullish trade for Disneyland, my advice to you, enter when it break 133, 134 level. 134 level. Now the problem is not bullish now. Now it's technically it's still bullish. It break the 127, 128 level high. But now the last 5 candles yeah, it's green, is bullish, is green bullish in color but it's going down. So for you to do a trade now, try to break 134 or 135. Then you do a trade for 30 days or less. For options, do at a money call, 30 days or less. Okay, feeling? 30 days. Don't do 6 months, 1 year. Because I don't because no reason to, because why? If let's say break let's say enter at 134 level. Okay, the problem the next level you must enter at a money call. Why? Because the next immediate high level is at 140 level. So this trade must Chinese say fast hand fast leg take profit one. You cannot, your target profit is not enter at 134 the target profit is 155 level. It's not because why? There is a at 140 level, you can see here now. Somewhere in February there is a major support, major clusters. Another one in November. Another one is September, October last year. So there is a major support resistance cluster at 140 level. Okay. So you want to enter a trade 134. Enter a tactical trade. 14 days, 28 days, 27 days. Don't do more. Do not do longer than that. No reason to. Because you hold too long, you enter, do a 6 month trade. you have to pay a lot of money there. So you must well do, because your trade potential is from 134 to 140 level, around there. Understand so far? It's called thinking trader. Anyway, one thing good about decent options, which I quite like, this options tend to be quite cheap. Let's say do a 35 days option. Look carefully, decent option 35 days it's only what no? It's only about $2 plus. Okay, $2 plus here. Do be careful. Just now I mentioned to you something, correct? You can see a price here. And the money put is $4 and the money is just below $3. There is a slight divergence for the at the money put versus and the money call 4 plus versus 2 plus. That means what? The buyers for the call side they're not so bullish, so that they are paying slightly less money compared to the put side. Okay, don't believe me. If you go down, if you go down to out the money at 125, it's $2 plus. If you go the call side out the money by one strike price is $1 plus. So if you notice for this way the call side is about like a discount 30-40% discount okay, 30-40% discount okay, and the money call, you can see you can see the numbers there is a discount. That means the potential movement for Disneyland, as indicated by this option premium analysis, showing us that the bullishness is not here yet. Okay, correct. That's why I say wait until 134. Okay, 134 is 13080. Now the price is 13080. The price showing us the the option premium upside compared to that of the put side is priced to go down. Any questions, Siu Ling? Any questions, Siu Ling? Tesla is one joker company, but it's lovely to trade. Now, Tesla is rich now, but it's going to test the 170 level. But one thing good about Tesla is a $5 spread or 250 spreads. So do not buy straight call or straight puts. Because like today price action value is what moved $18. Today is how much? Today moved $47 Yesterday moves $96 The day moved $200 The day before that moved $55. So we know for a fact this monkey here is a volatile company. So if the company is so expensive, is Tesla is like move $30, $40, do you think I call just have a look at it. One out for 18th of September is how much? Okay, don't I tell you literally don't buy such things, okay? You see now, how much it cost you? It cost you $14,675 to buy one straight call for 35 days away. Thomas, buy next Friday lah. You buy next Friday is also about 2-3 thousand. Is also not cheap. Is what? 64. Correct. $64 how much? Friend, $64 for 7 days. Audio check, okay lah. Can you hear me lah? So you're buying a straight call for next Friday night for $6,300. Do you think it's worth it or not, gentlemen, ladies? Can you see my screen, hear my voice? Okay, so this time, when you do a Tesla trade, gentlemen, when you do a, nothing wrong with buying $6,000 over dollars of straight put for 7 days. If you are super sure of your directional, most important is what is your risk capital per trade? So Shirley, what is your capital per trade now? $10,000, $50,000, or $500? Shirley, anybody want to do a directional trade for this company Tesla? This company is quite bullish. Do we agree? Bullish now. Thank you, Angie. Look, $6,000 option per day. Time decay every day $900 there. You know how much trade can we do for $900 or not? Let's do a fast and visual check. Can you see Tesla chart patterns and hear my voice? So Shirley, tell me what's the intention? I am loss, don't do. Income cannot. You can see 3 candles. Super. Okay. Income strategies is best farmer style. Is best in normal market environment. Yeah. Okay, now 7 day one. Buy straight call. This trade now. Because Tesla shoot up so high. Every trade going now is a $10 spread. A $10 spread is what? Means this is a $1,000 capital trade. By the way, wrong now suggesting 2 ways to trade this direct momentum trade now. Targeting next Friday night. Targeting next Friday night. Bull call spread. Okay? You can buy a bull call spread for $4.35. Maximum profit potential is $565. This trade capital requirement is $1,000. $10 spread difference is $1,000 capital requirement. Next, okay. Now, next thing you can do, you can sell, you can buy at a money call spread, or you can sell at the money put spread. So which one better? Buy better or sell better? Sell bull spread better or buy bear call spread, buy bull call spread better? Okay? I already tell you already. My students should be able to work out the P&L numbers. How? Buy bull call spread or sell bull put spread better? Anybody want to do a bullish directional trade on Tesla for next Friday night, 21st August? By the way, gentlemen, Shirley, Angela, and quite a number of people in this webinar are my students. So when I do public session, it's meant to be educational. It's really educational. My students come in and learn. Angie, Francis, Sam, which one better? Buy or sell a bull spread? Hello, everybody around there, or for everybody fall asleep? Francis, buy. Buy. Okay? Okay, gentlemen. So, yes, thank you very much. Okay, nothing wrong. By the way, B, but Shirley said, most of them based on what? Return over risk. Why? The profit from buying is what? The profit the return over risk is what? 565 divided by 4 by maximum profit is $565. Maximum loss is 435. Return over risk is about 130%. About 130%. If you sell, if you can sell a bull call spread, a bull put spread, the return over risk is only 100% only. The risk is the same. Both these trade is 1,000 US dollars capital exposure. Okay. Anyway, you all B is not a newbie trader. Is one of my option directional practical practitioner students. You go and do what I do. Tesla cannot trade income iron condors farmer style. Why? Can you see the pattern here lah? The last 3-day price, is it normal? Especially these two candles, abnormal is considered abnormal. So we will not be selling any normal income iron condor for example. Directional trade, go ahead. Okay, after Tesla, what was that? Who's the next one? Any more questions regarding Tesla before I go over next candidate? Any questions? Okay, don't have. Let's go to the next one. The next one. Oh, next one is that you, Angie? You want silver, correct? This afternoon session, I have a 2 hours plus webinar on trading gold and silver. So tonight, one of my students requested me to do a live market analysis trade. Live market analysis trade on silver. Okay. This SLV is a physical silver trust. That means what? Every share you see here represent 1 ounce of silver. 1 ounce of, okay? 1 shares is 1 ounce of, okay? So now let's go to options. So you can buy based on the shares, 100 shares, you can get it for $2,400 and $2,498. But we are traders. Why spend $2,500 for this trade when I can do a silver trade for much cheaper than that? How long? Make it 35 days. Your budget? You can buy. You can, very bullish now. That point bank. Okay, it's very bullish now. You can buy a straight call. A straight call. A straight call with a D50 number here. For how much? $1.88. Okay? Here. On the other hand, then you buy one contract here, then you buy another contract at 45 days. Okay, you go and buy at the money call here, 30th of September, another contract here. Can you see here now? So you add up how much here? You got two straight September on 30th of September. Just so far over for just under for trading, for short-term trading. You can buy at the money call, buy a straight call for how much? For 21st of August. How much? So you can see for 500 different trade call trade on different every strike price value of $500 can be divided into 5 different trades. And publish calendar means that you got expiry on 21st of August, 18th of September. Change it. Okay, 21st, 18, 16, add up together should be around just over $500. Friends, IG, just above $500 can. Is this be okay lah? Now, if you want to do a bullish directional long-term trades, Thomas, I want to do 15th of January. Unfortunately, 15th of January is 300 over dollars. It's expensive, but in terms of dollars and cents, not expensive, but it's expensive in relation to what? In relation to the share price of $25. I repeat, $3.80 is not expensive per dollar value per se, but it's expensive. It's buy straight call. It's very expensive because the underlying price is $24, $25. So if you really want to do this trade, then let me show you. Let me show how I will do this trade. Buy one calendar. Okay, short leg. Okay, expire 4th of September. Okay, the long leg should be somewhere in November series. Okay, November series, or you want to go short leg, you want to go also okay, you can go to January, you can go to December series, you can go to January series, okay. Okay, Angie, which one better? Francis? Okay, which one better? Buy 3 call options or buy 1 call calendar, but the call calendar, the leg expiring, long leg expiring January 21. Gentlemen, I know some of you get lost, but this is live market learning. That means what? I'm not bullshitting you theoretical value. This is my students putting money inside, making money, losing money in the market. So what I share to you now is live, is Chinese to realize, so 100% go and put in the dollar value in. So now Angie changed her mind. Instead of buying three bullish call, now she's going and buy a bullish calendar. Okay. Later on, Francis and Angie, which happened in my tutorial student. One of them is from 2019, one of them from 2020. We can convert this one into a diagonal. If the market move in favor of us, we can always convert it to diagonal. Understand what I'm saying, Francis? Angie? Anybody any question before this? Worst case, how much you lose? 200. The worst case you have now. Careful. This trade you don't need. Carefully, This trade power, look carefully. TD Ameritrade with their multi-million-dollar software computers multi-million dollars cannot even tell you the break-even price, the maximum profit also can't tell you, maximum loss also can't tell you. Cost of trade to do trade now is $211. Commission plus commission of $1.30. For both of you, go ahead. But for the rest of you especially the rational student one the junior level student one 2 times worse Any question about silver? You can buy one straight call. Okay, you can buy a straight call for December 16 for $230, or you can buy a calendar for January 2021 for $212. Better. Okay, both are equally okay. If you are tactical, fast in, fast out, then straight call, straight put is better. But if you want to do a positional, try to make 500%, 1000% return for your trade, then these style of calendars and diagonals are better. Any questions? By the way, Thomas, I want to do a cheap trade. If you are I want to make sure cheap trade to do if you want to do for learning purpose, you can do this way. Okay? This is a tactical intramonth short form calendar. Buy a trade 44 cent calendar. Okay? Either you can buy a 44 cents calendar, or you can do buy a vertical spread here. Or buy a vertical spread here. For how much? For 38 cents. Which one better is up to you. But technically speaking, which one got more profit? The calendar got more profit, but calendar is definitely more complex, more advanced. That's why got more profits. So you want to do a 33 cent debit $1 spread trade. That let you make $62 for every $38. For every $38 you prepare capital exposure, you can win the $62. So gentlemen, which one better? Those junior students. Which one better? Hello, Francis. Hey, please go just try the damn thing Okay? Instead of queue at 2:15 queue to buy at 2:20 Then you see how 20 or 2:30 there. Complain hard to fill. Now got full. How many minutes? This one no problem. Your trade is up. Your long leg is January 2021. So you whether do tonight on the take the you can open the trade tonight or open the trade tomorrow night or on Monday night or next Friday night, no difference. After your trade, how long? January 2021. But this is going to be a nice long window trade. Tell you first, Francis. So gentlemen, buy a calendar for this start it is going to be a long window trade, but the profit is not be one. The target profit is not 200% profit We are looking at 500, 1,000, 2,000% profit. Of course, provided the market go in favor lah. If the market don't go in our favor, then nothing much to say lor. But what's how much you lose? $213. You want to hold, you want to do PAP, you can PAP, pray and pray until January. Okay, you can pray until what? You can pray until January 2021. Any questions about silver trade so far? We don't pray, my friend. We are traders. We take calculated risk. This trade is based on chart patterns. This trade not based so much on them. It's based on social economics. The whole world is tanking. Okay, so now later the flight to safety is silver, gold, and platinum. Okay, will come about one. Any more questions? Any more companies? Okay, public members. Public, any companies not recognize? Sorry, if I sound long-winded or whatever it is, I don't give straight answers because you know why? I want you to think. I want you to so-called expand your mind. If I feed you too much, you make a stomach ache afterwards. Wally, any question? Wally, you my power option student, correct? If you are my power option, try to come in. All my power option students, try to come to attend the physical class tomorrow. Attend the physical class tomorrow, okay? Monica, any questions? Marie, any questions? Helen? Okay, wait. Someone ask a question now. There's nothing wrong with selling put. B. Good question. My student said, Thomas, I want to sell silver. Nothing wrong with silver. But what is the objective? Your objective is to get silver. Let's say now your objective is Thomas, I want to buy $5,000 worth of SLV silver shares. Okay? Example, I say $5,000. $5,000 equivalent. Because I think silver is a good hedge, as gold. But gold very expensive. My $5,000 cannot even get pounds. Now, so what can do? What can do? Listen carefully. Now the question is this: how desperate you want to get? If you are very very desperate, okay, my advice is to sell in the money. If you're not desperate to get some, let's say now you got $5,000. Say Thomas, I want to get $1,000. I want to get at least some shares in. Look carefully. So my first trade will do what now? I will definitely want to sell in the money. Okay, I want to sell in the money. I sell in the money because I will guarantee to get fuel. Okay, if I were you, you want to sell in the money. Okay, here collect $2 and $2 and what? $2.29. Okay, make it 230 lah. One contract. You see lah? Is what? $2,300. It means I buy silver shares at $23, for which you collect $230. 230. If you buy market price now, it costs you $25. So you sell this one, you got discount of $1.30. Personally, then fine. If you want to buy at $23, then my advice to you, want to collect money, correct? Go and sell what? Go and sell. Go and sell what? So it sells 18th of September. I repeat, 18th of September. Why 18th of September? Why I don't sell next Friday? Look carefully. At 18th of September at $23. Okay, look carefully. Collect only $1 only leh. Okay, sell here now. So technically speaking, you only can sell 2 lots only. If your position sizing, if your position capital exposure is $5,000, you only can sell 2 contracts of puts at $104. Okay, gentlemen, this is not trading. This is not trading. This is shares acquisition. She want to buy silver at $23 per ounce. But while waiting for the market to drop to a price of $23, she can always sell some puts at 23. Okay? So as long the market don't drop to a price of $23, she will not get the silver shares. Understand so far, B? Okay? So if your budget if your trade is Thomas I put in $10,000 each, then my advice to you, put in 2 contracts first, then next Friday go put in another 2 contracts. Hello, Francis. You cannot sell diagonal or calendar. Your skill level is not there yet. You can buy a calendar. You can buy a diagonal. Please don't sell. Thank you very much. Okay? Unless you want to have a wait check first. Okay, before we go there, come. B, any question, B? B, any question? Gentlemen, all these are my students, okay? Asking question now. My students now. So for I want to do this trade. I explain them. First and foremost, this trade is ambiguous. Like calendar and diagonals, is like profit unavailable, maximum loss unavailable, maximum profit unavailable, break even unavailable. Okay, interesting. I like it. Okay, broke the 1 year high here with conviction here. Then go a few candles now, go sideways now. Now it's just trading about $3, $3.50, $3.42, 43 cents below the immediate high. So what is your objective? Bullish? How long? How much? Then I will share to you the different strategies available. Most important, how long and how much. Okay, when I say how much is your risk. Or by the way, any trades doing diagonals and calendars double your margin requirements. What is your budget? And that's short term, my friend. Too little money, my friend. Don't do. Look, end of September is too short. That it defeats the purpose of a diagonal. End of September, correct? Okay, you want to what? Suggest you go and buy a calendar. Yeah. Then your hedging rate, my check hedging rate available. 35 days away. You want end of October, correct? September, end of October. I tell you what, we do, cannot. Sorry, you want to do 2nd October, correct? Okay, can try . Okay, you can try. But Francis, you you need to stand by at least another $500 to $1,000 for this. For this, if you want to maximize the potentiality, you need to stand by. Your initial capital exposure is just below $500. But if a market go in a way, you may need to increase your capital exposure from 500 to 1,005. You okay with it? If okay with it, this is a perfectly good trade. 195. Just out of the just at the money. Technically it's at the money. Now Thomas, I don't have the $500. Can I do a short-term trade? Yes, you can. If you really want to do a short-term trade, you can do this way. Buy at the money call. Don't buy a cost. Please go and buy a vertical spread. Okay, will cost you $115. For you to make money, go above 195. You see here, profit $135, maximum loss 115, return over risk about 115%. For those who are doing short-term tactical call trades. Anybody got any questions? Especially the public members? This is what we call market, trade market. Okay? Because end of the day, you tell me this, tell me that. I don't care. This is what market offer us. You just think about it. You want to do more creative, also can. Like I shared just now with you, we get a lot of different strategies. Most important is not the strategies or the expiry. Most important, what is objective, duration, and most important, what is your capital. No, sorry, Francis. Can you be more clear with your question? The first potential opportunity for you to exit or to take action will be when? You see lah, the first potential trade will be on 31st Friday night. You need to decide what you want to do with cut loss, take profit, or what you call do enhancing action. Okay, it's not when you exit, because your long leg is when 2nd of October. The first point of decision we want to do now, we wait until 31st market Friday expiry night on the computer. You decide what you want to do with it. Okay, now Thomas, watch out, Maria. Now you should not monitor it. Of course, if you want to put a take profit target for $8 tonight, I say go ahead with it. You know what I'm saying? If the market suddenly option premium volatility go crazy on you, you buy for $5 and market tonight 3 a.m. in the morning, let you take profit at $8, I say heck, why not? This type of profit is called OPV profit, option premium volatility profit. Okay, just take it, no harm. If not, you can wait until next Friday night. Then if the trade is good, you can buy back a short leg and continue doing it. Okay. Francis is my tutorial students. Tutorial students are 6 months long student learning student. Officially lah. Any question, anybody? Now 11 o'clock already. Sorry, my public members. My public members. People like who? People like Monica, Carol, Edmund, Gerard, Helen. Okay, Jason, any question? Karen. Okay, the other two, the two Leonard, don't need, I know them already. They're all my students. Marie, Monica. ask, because it's not easy. I was told it's very difficult to find an expert trader. Explain to you live in right-time market strategy. Explain to you live explain to you live in real life best market practice. Most of you teach you theoretical. Wang, any questions? Any questions? So far as I see, C give us a good project, give us a nice directional. C is I think it's a nice trade to do. Wally, take a trade, go and do an income trade. Go and do an income trade on C. Okay, for next Friday night. Let me check. Oh, by the way, for your place, I purposely adjusted so to see for sell 42, correct? 42, 142 is 100%. Sorry, it's not the 42 for next Friday night. Have a win rate percentage of 79%, probably out of the money. For the put side, have the probability of 166%, probably out of the money. Return over risk is 47, profit win 47, lose 53. Wally, do this as part of your income trade. How much you sell? Good. Next Monday night, buy to close. Okay, at X price. Okay, you know I do. You see, I talking to my children individually, so I understand them. So, like example, I'm not gonna ask Wally to do a $5,000 trade. Okay, I know all my students. In fact, even at the junior student level, is actually very much. Anyway, any questions so far? If you want to know more on my upcoming programs and things, or need help if you are trading, please go and take a okay. Call me up, Ken. Okay, fine. T what? T talk. T dog. I think last week we take a look already at T dog. So, gentlemen, Wally, what can you tell me about T dog now? You asked me to take a look at this company, correct? Why don't you tell me what you see in this T dog? Now I explain to you what you see and what you want to do is straight. Then from there I'll explain to you how to open your eyes and open your mind. Okay, bullish or bearish? When expiry? Can you give me what? Can you tell me exactly now? Next week what? I also don't know. Okay, you must telling me what, no? You must tell me something there. Thomas, I buy 200 put. I sell 195 put. There's a different thing there. So you long 2175, correct? By the way, gentlemen, my friend, you enter how long ago? You enter last week, correct? You enter should be last week. If not last week, should enter this Monday. Yeah, should be last week or Monday. Sorry, my friend. Then, may I ask Wally, you broke my rules. Close the damn trade. Now, you are not what you're doing here now. You're doing PAP now. You enter on 5th of August, T-Dog here, enter 5th already. Go up, go down, now go up again. Since then, how many, the last 5 days go sideways. It's not making new high. It's showing bearishness. And it's testing the 181, the 1,800, 180, 180 support resistance zone here. Unless you're telling me your trade have no money. If you cannot sell your trade for 10 cents, 20 cents, or 30 cents, if there's no money inside the trade, then no choice. You go and continue to do PAP, pray and pray. Pray and pray. If they can get, if you can close your bull call spread for 30 cents or 20 cents or 40 cents, please do so. You have broken my rule already. By right, by every definition of right, you should have got out when? You should have got out at $190. Actually you should have got out earlier than that. Then Wally, in this case, you tell me 10 cents left 10 cents only, correct? If left 10 cents, then don't mind hold on until next Friday lah. You see now? How much you buy? $1? Or how much you buy for the trade? $1, 10 cents, or $1? How much you buy this trade? So gentlemen, he bought this trade for $110. And the trade was on the 5th. And now our friend have been now my friend have been holding the thing now holding for 9 days. He made a mistake. How much you lose? $110 now. Since he left 10 cents, I tell him, hey friend, go and hold for the next 5 days. Okay, let him pray some more. Okay, let him pray some more. Once you pray some more already, then let him learn the hard way. After all, you need $110 only. Let me out. My student can lose 5, 10, 15 trades in a row because every trade is about $50, $110, $150 only. Fixed risk trade. Everything we going 110, we know we're going to lose how much. We don't want to lose 110, but we're prepared to lose 110. Okay? Wally, you make the mistake, correct? Okay? Tomorrow I explain to you again. Okay? You should follow the X day rule. Okay? Okay. Any more questions? Any? Now it's 11:10 already. Any last question? If you need help, please do me a favor. Contact me now. Don't wait until you lose $10,000, $20,000 per trade over one night and then ask for help. Your job is not to make money. Your job is to achieve skill competency. Okay? Okay, your job is not to win 100% win 80% win rates. I got student 80% win 80% losing rates and still make money. Okay, I got student 80% losing rate and still making money. Okay, not a lot of course but it's still making money It's not losing money Any questions? If not, let's end tonight's session. All those people who need help, please send a message to me. Don't wait until your account got burned or you start losing $4,000, $40,000, whatever, or $12,000. Then ask for help. Then it's gonna be very difficult. House on fire, very hard to save that. Okay, rest. Need help? Send me a message. I got upcoming class for power options and option practical. When I say practical means what? Gentlemen, I expect you to trade. Wally, coming tomorrow afternoon, please. Thank you. Morning, Maria or Siu Ling, is it? What's again is Siu Ling, call me up if you need help. Berliner, okay lah. Benny Chill, everything okay? Ask for help. I conduct classes not so often nowadays. Benny, any questions? If you want to have a private session with me, Benny, call me up, drop me a message. If you got problem, ask your friend to for my contact details. Remember, gentlemen, ladies and gentlemen, market is great, market is fair. Strategies don't help you. Strategy is just a tool. Strategy will never replace your trading skills, your trading knowledge, trading competency. Okay, repeat. Knowledge will never replace skills, competency, expertise. Okay, good night, everybody.